CMQ investors, welcome to the show. This is Chris Franco, and I have here 4 key takeaways from this last weekend's annual Berkshire Hathaway shareholder meeting, which was in Omaha. I know some of our fellow CMQ investors made it out there. I did not, but we have a great summary here from Barrons, specifically from Nicholas Jasinski, which I'll read from, as well as offer my own thoughts here. So let's get into it. The 4 key takeaways. Number 1, Warren Buffett still likes buybacks. Berkshire's pace of stock buybacks declined in the first quarter, but that does not mean that they are not still doing it. So if you're a Berkshire Hathaway shareholder, don't feel like, the days of buying back shares are over. According to Buffett, if you do it at the right price, meaning if you buy back shares, there's nothing better than buying back part of your own business. True. Next up, Berkshire, and this is probably my favorite takeaway. Berkshire made some massive stock purchases in the past 2 months. The company found some large and attractive opportunities this year, which I'll tell you about right now. Buffett struck a deal to acquire insurer Alleghany for about $12 billion in March, and also scooped up several billions worth of Chevron, Occidental Petroleum, HP, and added to their positions in Apple and Activision Blizzard. Berkshire bought a total of $51.9 billion, that's billion with a B, in the past quarter, which is I think the largest amount of new equities purchased since 2008. They also sold $10.3 billion worth of equities in the quarter, but the bigger point here is they've chipped away in a meaningful way to that massive cash pile that Berkshire has on deck. So currently the company ended the quarter with $102.7 billion in cash and U.S. Treasury bills. Moving on here, Berkshire isn't trying to predict future inflation, and this is actually very consistent with what I've uncovered over the years studying both Warren Buffett and Charlie Munger and what they've had to say about inflation. When inflation was just, kind of just still on the horizon, I was going back to all the old meetings and trying to get a sense of, what kind of wisdom or advice that Warren and Charlie would offer. So this is very much seemingly kind of a repeat, but it's worth hearing again. Buffett said, "It's extraordinary how much inflation we've seen." And he's seen it specifically in the increasing prices at Nebraska Furniture Mart and other Berkshire subsidiaries. Remember, Berkshire Hathaway owns full businesses, and so they have an enormous amount of sales data. They have a great vantage point, I should say, to see what inflation's really doing to the American economy. Buffett added that predicting future inflation is a fool's game. I repeat, a fool's game.
But I pity the fool.
And that no one can really know how much inflation there will be over the next 10 years, or 12 months, or 4 weeks. Keep that in mind. He said that the best defense against inflation is to be skilled at what you do and to produce a good or service that will remain in demand and which people will be willing to pay for. Quote, "The best protection against inflation is your own personal earning power. No one can take your talent away from you," Buffett said. "If you do something valuable and good for society, it doesn't matter what the US dollar does." I repeat, if you do something valuable and good for society, it doesn't matter what the US dollar does. Last but not least here, takeaway number 4. Buffett and Munger see market volatility and speculative behavior as an opportunity. This should come as no surprise to any student of Warren Buffett and Charlie Munger, but it's interesting to hear how they talk about it in context of 2022. Both Buffett and Munger derided what they called gambling in the stock market in recent years. Buffett said that short-term swings in prices can be buying opportunities for Berkshire Hathaway. Quote, "Sometimes markets do crazy things. That's good for Berkshire. Not because we're smart, but because we're sane." Buffett and Munger also took several swipes at investment bankers, active investment managers whose portfolios closely resemble broad market indexes, and other Wall Street businesses. And this is funny, when they were getting a bunch of flack from Robinhood, and it was done very manipulative. It was a very manipulative way that Robinhood tried to position Buffett and Munger as like the old elite that didn't want to see, retail investors do well. It was playing into this ignorance that Buffett and Munger are somehow, buddied up with, Wall Street, basically. They've been so outspoken against what some would consider the best practices of Wall Street. You could read probably 100 pages of a biography of, either Buffett or Munger and realize that these are not some sort of like Wall Street elitist. These are not the typical Wall Street guys. But what did you think? If you watched the Berkshire Hathaway shareholder meeting, what were your thoughts? Did you enjoy it? What was your favorite takeaway? I'll definitely have more videos about this in the coming days. I'm just still letting it digest. I wanted to watch it on my own terms and not when everyone's trying to like live tweet it. So I would love to hear your thoughts though. And as always, I appreciate you watching this video. For CMQ Investing, this is Chris Franco. Thanks for watching the video. I hope you'll subscribe and become a CMQ investor. Nothing in this video is financial advice, but I sincerely wish you all the best in your future investing endeavors. Take care.